both gap opened up higher. So that's Friday's high. We didn't quite close the gap, but I was actually looking to buy I had two chances too. I didn't take that one. I didn't take that one. I should have taken that one. That was the confirmation I should have taken. Market's in a huge uptrend. I mean, this market is just a beast. It has its own gap now. Doji, maybe. Be something interesting to watch for tomorrow. So yeah, cattle. Well, I'll pull up the fundamental. There's some fundamental stuff going on there. Let me see if I can find this real quick for you guys. Yeah, Moses, I think it's definitely extended. I think, the problem is when you make these contract highs, although you get a little bit of clarity in here today, because you do have some resistance that you can at least maybe take some risk against. Like, I mean, right now, problem is, and Greg, you traded them a little bit today, opens can get a little whippy. But at least now, where we close today, you do at least have, obviously it's a number that probably everybody and their brother's looking at, but it's contract highs, and by the way, that's all-time high. So at least you have something to lean against. I don't know, like we had said before, when cattle had turned, making contract highs before, it had some pretty good, obviously that was, we've had these pullbacks. I don't know, man. That's look at this on a daily again. I mean, the problem, I would say, guys, my feeling on this one would be is when we've had pullbacks in the past, like here, there was a technical that technically gave us a chance. Same thing here. That one maybe not as much, but up here until it starts to give you something technically to lean on to take a short. I just think you still got to buy dips. But that candle concerns me a little bit going into tomorrow. So, but let's pull up. And the other thing you have to realize, we've talked about this before, and this is going to be a problem. I'm going to tell you right now, it's going to be a problem. I shouldn't say a problem as much as it's going to be um, getting closer. It's in rollover, and usually we will not roll out of that contract for a little bit. So we're gonna have to keep an eye on that too. Lot of and once again, that doesn't surprise me at all that a lot of open interest came out of the market on Friday, and I can guarantee you that a fair amount of open interest dropped out of that market today. We'll see in the morning. Um, but yeah, it's definitely one on my radar. If she doesn't go right away, um, once again, the strength in the equities, would help prop it, especially as high as we went. Um, but pull this up real quick. Just seeing, when did that one come through? Real early this morning. All right, let's take a look at this one. It's not the right file. Hold on. You know what we should do? Let's go here real quick and let's see what. Think you're going to be interested to see what comes out of this bad boy. Let's see what they said today. Not in there yet. So June goes off the board the 30th, so we still have a month and a half. It's not going to be that big a deal. That's just basically talking about the cash. That's not going to really give us anything. I'm going to rate to really see what the news that comes out in the morning tomorrow. Wasn't a ton that came across today. There is some stuff about some stuff that may be coming out of Mexico and the cattle. So be interesting to see what transpires there. So yeah, I do agree that there is some opportunity to be had. So I think you're gonna have to stay patient a little bit there. And I think basically, so let's see, let's go to mine real quick from today. Hmm. And we got 252. Refresher. Basically in my day today trade, and I did activate my 100K, but I didn't use it today. Kind of want to finish out this combine here, the 150. That's the one I've been sharing the last week and a half. Pretty much today, stayed under my quota. I did trade a little corn today. Try to do a scalp into the WASD number a little bit. Traded some. I mean, the thing that worked for me today is buying the equities on dips and selling gold. And I did it several times today as a whole. And it definitely, that trade was working super well. So, once again, hold times are pretty decent right now. I like the, kind of growing it slowly, not having them, had one really good day in here, but ultimately we kind of just building it up. So I feel like it transfers to the XFA. It doesn't look straight like a good old mountain. I like the factor that, my win rate's still staying in the mid 60s and I'm still 2 to 1. So yeah, that means I'm, staying patient, holding my winners and cutting the losers. And yeah, so 1, 2, 3, 4, 6 days. Keep building on it. See if we can keep it going tomorrow. Once again, I think I shared earlier, it's just trying to instead of trying to take A, B, and C setups, taking more like just A and B setups and letting some of the other ones go. Like, and I get it. Guys like Mo, I mean, they'll take everything. More often than not, Mo takes probably what 90% of what he sees. I'm not so much that way. I'm just a little bit different in that. And I know good trade. If you see your setup, you're supposed to take it, and the good ones I do. This one, man, she hasn't had the ranges lately, and now the ranges are starting to go up in Bitcoin. And we were talking about this on stream. And I didn't pull the trigger on that. I'm kind of kicking myself a little bit for not taking that one. When Bitcoin, that's micro Bitcoin, when it got down to that like 101, 300 area, and it just bounced off of there pretty good. And that, once again, it's one that's kind of in between the 200 and the 50 now. Kind of in that limbo. It really needs to get back out and take out that 103, 500 area. So I'm interested to see how that one reacts in the overnight. A monthly, Greg, they're monthly. So they get a little wonky at the end of expiring at each month. That is one thing I will tell you. But that's one. Gold's the one. I don't know. We cleared a big hurdle with the tariffs, at least for now. We're getting some ugly price action here in gold, guys. Hogue was talking about the island, big rejection there. Couldn't go back and take out those highs, and now we've got a gap down. That's an inflation number tomorrow. I don't know. There's just some cracks, but I think the big one is going to see how this market reacts around 3190, 3200 area. We're testing there tonight. I think that'll be if this has more like a I mean 3180 would be 61.8. Get really dicey. 30.96. Definitely feels like we're heading that direction. And the biggest thing here, guys, is these down days have big volume. Big volume. That'll be another one I'm watching pretty close tonight. The other one, like I said, that might. Another thing is grains get more into season too, guys. Like I said, shorter term chart. I mean, beans are definitely more of a mover than corn. Corn does move slower. But this is a time of year where you'll get the grains movement. We had the WASD number today. And I'll tell you, if you know they come once a month. Next year, these before we go through grains. So next one will be June 12th. And they're just basically, if you guys want that, for any grain traders, I'll share that one with you. The negative delta on the ES into the close. Delta's been weird there lately. You know, we had a directional up move and then make a run like that. I mean, at some point, you know, there seems to be a lot of conjecture out there.
The market
that
is
this
open.
Is just a rally, just a retail rallying this market, and then it's going to sell off, which wouldn't surprise me because we really, guys, have not seen a lot of volume flow through the dome at all and a ladder over the last several. We haven't seen it for a long time. And if anything, they're to the sell side, very little to the buy side yet. Anything. So, but with the grains, their reports are kind of like any of the ag reports tend to be fader reports, which means they get going one direction. Like if you look, and this is just, didn't say it happens all the way, but it happens a lot with these reports. Where, you know, this is when the report came out, make a big run up, then come back down, and then go lower on the day. Soybeans did the same thing. Not as bad as corn did. Once again, I think corn is going to be the market that's in trouble more often right now as the weather stays good, because there's more corn being in the ground than there was soybeans. So if the weather stays good and farmers are in the field, then corn is going to be the one that you're going to want to be short for sure, because that's most of what's in the ground. So that's a little recap on what I did, what I saw a little bit today. I think the only other one that I keep staring me in the face is those. We haven't talked about them. And CPI might change that, but once again, currencies took a pretty good slap today too. The dollar rallied, so a lot of the currencies like the yen and once again negative correlated to what was going on with equities. And the 30-year chart didn't really look that too dissimilar. In fact, the long end's taking a bigger hit than the short end. So, yeah, that I'll be interested to see what comes out of CPI tomorrow. see if that makes any mover to it. Might have an effect on gold, might have an effect on copper. So that'll be interesting to see in the morning for sure. So some of the stuff, as we talked about last week, that I'm going to roll into this week. I didn't, I'm pretty much out of 90s movie clips. I think I beat that one pretty good enough. So we're going to continue that up a little bit from last week into this week. The one I didn't have with us on Friday was talking a little bit. In fact, you know what? One thing Coach did say that I guess I should talk about real quick. Not that you guys probably give a ton about, but so I'll probably do a poll Wednesday about when I rotate back into going through commodities, picking a sector. What sector you guys? So just think about that today, tomorrow, and then we'll do a poll on Wednesday about where you want to start again. If we want to start with equities, energies, grains. So just put your thought into that one a little bit. Because the reason, pull this up, trading view, is so Coach had said something about this. And this isn't traded on um, Top Step X, but these are the, you guys haven't heard about this. When I do cattles, this is thrown in there. It is part of the meat complex. And I'm not going to get in whole specifics of the feeder cattle if you want to go down that wormhole a little bit. If not, when we get to the eggs, we'll talk a little bit about fats or feeders. But this is what Coach Paul was talking about before. Obviously, um, the thing about feeders is basically these eventually become the cows that come to market, but we're talking 9 months down the line. So they do tend to lead the way right now. So and obviously you can see that market's been on an and it's been on a tear for a while. I mean, look at that. That's going, and that's the cycle that happens a lot with cattle. When you see it happen, it starts. I mean, that's almost started a year and a half ago, and that starts with the feeders. You know, when the supply starts to become lean, it shows its head in the feeder market ahead of time, and then it creeps its way into cattle. And like I said, when it runs, it tends to lead the way. And these are like historical highs for feeder cattle. Um, but we'll get more into that, the meats. But that's what Coach Paul was talking a little bit about. We don't talk about it, but it is actually a contract that is traded. Um, you know, yeah. Well, we'll get more into that one. But the things I didn't have to finish up were, as we talked about, as I celebrate 35 years on the floor this month, we talked about some things that led to the 90s, and we're going to get more into those 90 things that kind of were innovated and happened that when I was on the floor. Um, but we're going to talk about uh, the 87 crash. And I didn't have all my ducks in a row on Friday. So we're going to got about 45 minutes on this one. So yeah, we'll do this. And um, you know, we're gonna talk today and tomorrow about the crashes. Then we'll talk more about um, the kind of the migration of how the space changed from floors to electronic. But this is a good little intro. And some of these guys you will recognize. The Chicago Board of Options Exchange is it was all part of the dynamic of what happened, and it actually in somewhat saved what could have been like even worse than it was.
This is the Nightly Business Report.
Good evening, everyone. The law of gravity hit Wall Street today and financial markets around the world, for that matter, as stock prices plunged even more than they did on Black Tuesday of 1929.
It was the defining moment of the 1980s. October 19th, 1987, the Dow Jones Industrial Average plunged 508 points, the largest single-day drop in the history of the stock market.
There was guys with their heads down, a few people crying because they'd lost everything.
Well, you're thinking, how much lower can it go?
It was the only time I've seen fear take over greed.
I've often said that it was the most frightening moment in my life.
There were a near record number of people gathering outside the New York Stock Exchange today to sort of witness history in the making.
The world braced itself for another Great Depression, but it was Tuesday, October 20th, that the financial markets came within minutes of a total meltdown. Floors in Chicago. The 1980s, America is flush with cash.
You have to remember, as traders, we couldn't care less why there was a bull run. I mean, the Cubs were in the '84 playoffs. There was, the city was up for grabs. We were all young.
We were the house. We were the casino. Public orders would come in. They would sell to our bids. They would buy from our offers. And we made money from, the space in between.
So we all made a lot of money in the early '80s.
Always by puts and calls, going way back in history at the stock exchange. But when the CBOE came about, that really created a market for options trading and hedging.
A portfolio of Dow stocks that trade in New York. A futures market was created in Chicago.
Once they agreed, I knew we could do stock index futures, and I convinced Standard & Poor's, which was then its own corporation. Later it was bought by McGraw-Hill. I convinced Standard & Poor's to give us license to launch stock indexes, and that was launched in '82.
The markets were wide. They were good. If you were like anything else, there was definitely a market to exploit.
We were making money because you could kind of drive a truck through the markets, and there was a ridiculous amount of order. We called it paper, but there was a ridiculous amount of orders at the time.
E, for lack of a better word, is good.
Wall Street's Gordon Gekko, based on maverick icon Ivan Boesky, harnessed the power of computers to become the most successful trader of the day.
What computers have done for the world of trading, at least for the world of retail trading, is really unbelievable. The gap between institutional professional trading and retail trading was huge back in the '80s and even into the early '90s.
As late as 1985, on the CBOE and the Pacific Stock Exchange, they would not allow you to have a computer on the floor.
But it was the dominant trading strategy on Wall Street.
The idea was to give institutions and individuals, if they had enough money, a way to hedge a bet, as well as to create a portfolio of stocks in one sort of swift action, if you will, one purchase, one.
So that's the Chicago Board of Options Exchange. I mean, think how big zero DTEs are now. I mean, the volume in the option business is creeping, if not past, the futures business. So, if maybe some of that was in place more in '87, could it have made it different? I don't think anything's stopping that. You know, when somebody said 500 points doesn't seem like a lot, but if you look at what that was in a percentage move back then, you're talking much different. You're looking at a Dow that's in the 40,000s. You know, then you were talking about. I guess we should probably look at that, and they'll probably show it.
By dumping $1 billion worth of stock into the market with the press of a button, a program trader could single-handedly lower the value of stock. If the stock was part of the Dow Jones Industrial Average, the transaction had the potential to move the Dow.
So the Dow Jones Industrial Average represents an average price of a basket of stocks. In this particular basket, there are 30 different stocks, and each receives a weight corresponding to its price. So you're just taking the average of these prices for 30 companies.
The major market index.
All right, trivia question. What's the highest weighted stock in the Dow? Think about that. No cheating.
Is a group of 20 stocks that mirror the Dow.
They're all very large stocks. You're looking at the IBMs and all the blue chips.
This index trades at the Chicago Board of Trade. 17 of the 20 MMI stocks are also part of the Dow. The purchase of those 17 stocks would increase the major market index and could also move the Dow.
In the MMI, just go put large buy orders in or large sell orders into 20 stocks, and you could affect a change if your orders are big enough. Again, in the long run, the market's always bigger than.
You're not gonna let me change that by weight. Yeah, that's done by weight. There you go, right there. There it is by weight percentage right there.